Good morning, everybody, and welcome to Coffee Shop Crypto. I want to send the big announcement that the new version of the HARSEi that everybody knows and loves from the originator, Jay Rogers, is now available on TradingView. Let's just take a quick look at the old version of HARSEi. I call it the older version because it's written on an older version of PineScript. And I spoke with Jay Rogers a few times, and he just doesn't have the time to update the code to version 5. So while updating the code and taking it over for a little bit, I decided to add in a few extra features, and I want to cover what those things are very quickly in a very quick video. Any questions that you have, go ahead and ask it in the comment section below, and I'll be more than happy to get back with you and the rest of the group. And I want to tell you about a few questions that came to me when using the old version of HARSEi. So it helped me develop what the old version was lacking, and I put it into the new version. So here's the setup, the input window, and so on, the configuration window for the old version of the HARSEi. You can see the candles, the HARSEi candles. You're allowed to change the length, but it's only for the opening that you're allowed to change that. In the new version, you can change the high, close, open, and low. So you can set them individually. This is the new version, the Coffee Shop Crypto HARSEi. Now, also in the old version, the RSI plot, the RSI plot, Relative Strength Index, it's still the same. I didn't change the fact that you can set the length and the RSI plot, whether you turn it on or off. However, in the new version, you'll see that the new version of the RSI allows you to, so here's the RSI, right? There's an RSI length and how you want to set your source. But I also added in moving averages for the RSI. Recently, TradingView did an update to their common script for the RSI, and it allows you 1, 2, 3, 4, 5. I think it allows you 5 different moving averages. I decided to add in the volume weighted moving average, the least squares moving average, and the VWAP. And I'll show you what the reference is and why that's in there later on in this video. Back to the old one. So far you've got 4 different ways that you can set up smoothing, and the RSI has moving averages tied to it. The stochastic length, I left everything the same. The only thing I did was I removed the scaling, because in the new version it's not relative that you need to introduce scaling. And also in the configuration for overbought and oversold boundaries, that is still the same. However, I did add in a couple of lines that I found that are relative to things that happen in the oscillator scale. And that is adding in here, go to the new one. That is adding in a upper midband, okay, at a 60 level, and a lower midband at a 40 level. And you can see in my window right here that very commonly in a downtrend, in a pullback, let's say, in a pullback, you'll see that the RSI and price action will have a very significant impact at that level, at that 40 level. And the same thing happens at the 60 level. If you look to the left of the window right here, you can see that price is having trouble breaking through that area as well. And as a matter of fact, you can see how RSI comes up through it, bounces off of it, comes down, bounces off of it again from the underside. So it sees the 40 and the 60 level for some reason as a support and resistance level. I saw this taking place at every 10th level in the scale. So it's taking place here, it's taking place 50, 60, 70, and the 80, and as well going the other way. So there's a few things that have been added in there, and I'll show you why that's in there right now real quick. I know I'm going through this very quickly, but again, I want to leave room for you guys to ask questions in the comments and just really keep this a communal thing. Now, most of the time when you have, I don't want to jump around too much, but I want to just cover this real quick. Most of the time when you have an RSI, you use a moving average for it, where, see, here's your stochastic, here's your moving average is the orange one, and the RSI is the yellow line. Now, you can see how here at this level, right, you can see at this level that they're stating, that the moving average is stating a new trend has begun, and that's at July 28th at 9:30. But if I change this to a least squares moving average, okay, the trend was actually broken here earlier. You're able to get into the new trade almost right at the pivot, okay? And you can do that. Don't worry about what this indicator is up here. It's a Mass Effect moving average, another one that I've created, which I would like to be distributed in pair with the coffee shop crypto HArsEi. So let me turn this one off. You don't need to see this one right here. There we go. Now, this least squares moving average tells you that the trend is broken, and it's telling you again that trend is almost broken here, and it tells you again that it's broken here. So it's giving you a couple of exit points. So the least squares moving average isn't necessarily an entry indicator. It does a very good job of telling you when to get out of a trade. So again, that is the RSI moving averages, of which you get a few different types. Now, you're going to see that I did add in a VWAP indicator, a VWAP. I added in a VWAP moving average. I set it to the 21 length. That's just for me. Now, the reason I do this is because if you're looking to get in after a pivot, if you're looking to get in after a pivot and you want to get in at a good price, okay, what you would do is you would wait for price to break that VWAP level. And that's your confirmation that price is moving to the upside. So with that, your VWAP is now your 0 level or your 50 level. You don't need to wait for RSI to break above your 50 to go bullish or break below your 50 to go bearish. You don't have to do that. Now you can see the average price directly on your screen without waiting for something to happen over here. Now, I don't want to get into trading styles and entries and exits, in this video. This is really about telling you what this new version of the indicator is doing. So in using the old version, it left me with a few questions, and I wanted to know, what if you didn't need to wait for the RSI to go above 50 for bullish or below 50 for bearish? Well, you can see that now by using a VWAP to enter your trades. Another question that it left, the old version left, was what if you can see when a move in the market is just a liquidity trap, right? So here, for example, you can see that there's some bullish candles coming up. A lot of people would start getting into this trade, and they would simply do it by using the 50. Let me turn a few things off. They would simply do it by getting in when price crosses the 50 level over the 200. Well, you can see here using the VWAP that it barely broke over that, that it barely closed over that VWAP level. So with that, when this candle closes above the 50, my confirmation is right below it. The Heiken Ashi candle doesn't even close on the VWAP, so this is not an entry. This one closes over it, but it's still too close. I would not take this trade. Absolutely not, And this is giving you a clear indication of what's happening with volume behind each bar. And it's very important to do that, especially when you're scalping. I'm looking at a 3-minute right now, and there's a lot of noise on this screen. So as a perfect example, this one broke over the 50. You can see that it broke over the VWAP. You can watch a couple more candles. This one closes over the VWAP. Well, this would be your entry. The next candle would be your entry. So using my indicator, which I'm about to release, you can actually just simply turn on your plot. You go to your low. I said that this candle would be my entry, right? I would go to the top of that wick, and I would be able to take my trade. I'm going to take profit 3, and I can assure you that right around here, this is the end of the move. It's going to start slowing down. We can watch that if we want to. We can watch this take place. This would have been my entry, and this would have been my exit. Already you can see the first candle coming up is red. Stochastic is in the overbought area. RSI is overbought. Things are way too far away from the VWAP. Price is going to start moving back down for a correction. Now, it's very simple using both of these indicators together to get in and out of trades very quickly. Just while talking with you, I was able to get into a trade and out of a trade. I would have done it, but Again, this isn't about doing entrance and exits. Now, back to the questions that the old version did leave. What if you can use a VWAP on something longer than a daily chart? Okay, well, it's not necessarily a VWAP, but if you're using a 1 hour chart, let's switch it over to a 4 hour chart, right? Now you can see that the VWAP line is still here. Great, wonderful. But this doesn't tell you when to get into or out of a trade necessarily. This is just telling you when it's a good time to buy at a good price. So if you're doing things like, dollar cost averaging, and you really want to examine whether your investments are at a good price or not, then fine, you can do that. Here's your VWAP. Now, of course, when you enter a 1 day chart, the VWAP disappears. So how do you know when to get out of a trade? At that point, you can use the moving average, which is a least squares moving average. And it plots back on there, and you can see that it breaks trend here and starts moving up. Then it breaks trend here, RSI is moving down. And it does a really good job of staying close to that RSI action. Then you can see again, the moving average goes underneath the RSI, you're back into an uptrend. And it's doing a really good job of showing you all that information. And this is on a 1 day chart. Now, if I switch this over to a simple moving average, what happens then? It tells you that you start your trend here and you get out here. Why would you get out? What would you get out for? The trend is still obviously moving up. Like you don't want to get out of this trend. You would have missed this point. And you would have to get back into the trend an entire day later. You would have missed all of this opportunity. And there's several points where using a simple moving average on a very long time frame kind of work against you. So that's why I end up including the least squares moving average. Is for when you're doing really long trades. If you have a really good rally taking place, like the one that just took place on Bitcoin, for example, it's telling me to get out of the trade here, but I don't know if I would necessarily do that. Let's see what the least squares would tell me. Least squares would tell me that I need to get out here. That would have been better. The other one would have told me to get out here. So if I got out here, I would get out at this price. If I got out here, I would have gotten out at a slightly lower price. And while that would have been great for getting back in, it doesn't really help me out. I would like to get out here, wait for all this consolidation to take place so I'm not dealing with any of this downtrend, and then I would get back in at this point. Least squares is by far, for me, a better exit indicator. So I usually keep it on there, and I switch between that and the VWAP just to know if I'm getting in at if there's real volume. A few questions that the old one leaves is, what if you wanted to have both Heiken Ashi candles and Japanese candles on your chart at the same time? Just like the old version, you have your Heiken Ashi here, you got your Japanese candles here. I really like the fact that you can adjust the open length separately from all the other lengths. And you can see now that my wicks on the opening, the wicks at the top are just very long, right? And you can switch that again. I use 21 for everything. And you can set this to 50. You can set the high for 12. Whatever you want to set it for, it doesn't really matter. It just changes according to your style, which is whatever's relative for you. Also, I covered it very briefly. Did you know that the RSI has hidden lines of support and resistance? So you can see again while we're talking. Let me go back to this 3-minute. No, I don't really need to. So you can see that this crossover between the least squares and the RSI, it actually took place at the 60 level. And right here, RSI is bouncing off, least squares is bouncing off right at the 60 level. Again, things keep happening at this same level. Heiken Ashi is having trouble getting through this level at the 40. RSI is bouncing off the 40, 40, 40. It bounced off 4 times until there's a big push to the upside. I squared this, I highlighted this area because I wanted you to understand that this is a false breakout. Do not get into this trade. Let me switch this to VWAP, right? And you can see that it opens and closes immediately above the VWAP. So does the candle before it, both of these green candles. Now, that's an indication not to get in. That is an indication of a pump, because your price is best when it starts below the VWAP and closes above the VWAP. Like this one, barely closes below it. So, just a quick couple of notes. I want to thank everybody for coming through to the channel, watching this video for Coffee Shop Crypto, in which I'm covering one of the most popular indicators on TradingView, called the Heiken Ashi RSI. Now it is called the Coffee Shop Crypto HArsEi, the original one created by Jay Rogers, and a lot of credit goes to you. The original one was written on PineScript, and it was on a previous version of PineScript. And while PineScript continues to update their code, which is now up to version 5, the new version of HArsEi is written on version 5 PineScript. I developed it using a secondary indicator that can give you much better returns on your trades as well. The second indicator is called the Mass Effect Moving Average, and you can see that on my screen. Again, at the time of recording of this video, it is not released, so do make sure to follow my profile and just look at my updates that take place, and you will see when the Mass Effect Moving Average will be released along with the Coffee Shop Crypto. And using this indicator is very simple, and let me give you a quick little synopsis of how it's working. When your stochastic, essentially when your stochastic is red and your ribbon is red, and you are with red candles, you can get in to a trade, and the reverse goes the same as well. You can get into a trade and actually catch the entire move. And with that, I'll show you this one just real quick. So stochastic turned green, my ribbon was already green, and the stochastic was green. My pivot's here, right? Okay, so this is telling me where I can get out of consolidation. I simply do this, and we're taking profit on take profit 3. My Fibonacci tool is set to take profit 1, take profit 2, take profit 3. For my case, in this case, I would do take profit 1. Why? Because right now I'm going against the trend. Here's my 50 period, here's my 200 period. Using this indicator, the Mass Effect Moving Average, paired with the HArsEi, this tells me to use take profit 1. This is against the trend. This is in consolidation. This is with the trend. So this would have gotten me out of the trade right here. Right here. Okay? Now, that being said, I would have taken a profit there. Then, all of a sudden, I would end up seeing price break above the 50. I see my bands get wider again, so I would again go from here to here. Now I'm going with the trend, right? And this trade is going to end up moving all the way up to this point, which is just above the drop zone. And in another video, I'll show you why on Bitcoin this is called the drop zone. I'll put it up as an idea in my profile. There's a lot of very easy moves that you can use when using this indicator. You would have been catching this rally that took place on Bitcoin a little while ago. Now, back to the front over here. There we go. Now, I've been using the original indicator for about 3 months and doing a decent job getting good trades on it. However, I felt it was lacking a few things, so I decided to rewrite the code into version 5 PineScript and add in a few special features, which I've covered already. So those things are those things are setting the open, high, low, and close individually with their smoothing. You don't need to wait. You don't need to set just the open or just the close or just the high or just the low. You can do that separately and individually. Now, the stochastic RSI is still the same with your K line and your D line, and you can color them as you choose. The relative strength index now has moving averages tied to it, being the LSMA, the least squares moving average, and the VWAP, the volume weighted average price average, moving average. The RSI based least squares moving average just hugs the price a bit more closely, and when used on a strength oscillator, almost draws trend lines for you. So that means you don't need to go in and draw trend lines on your, let's just get here, let's get rid of this, and we'll take away the moving average real quick, and I'm going to leave it as least squares. Okay, now, so, sorry, one more second here, and this is what happens when you're doing it live. I don't need this on. Now, what you would usually do is you would draw trend lines on your RSI to understand when you have a break in trend. So with that, you would, if you're in an uptrend and you want to see a pullback, right? It's for catching pullbacks. You would do this, but you would have to do this over and over and over again. I don't need all this. You have to do this over and over again, right? You catch this one, you go this way, and so on, right? You know how to draw trend lines on your RSI. But what if you could just have a moving average that's essentially drawing the trend lines for you? So we'll go ahead and we'll put back the RSI moving average, and you can see that it started the trend here, right? It said get into the trend, keep moving up, you're good to go, keep going up, keep going up, keep going up, don't get out until here. That's the end of the trend there. That's a confirmation of the end of the trend. And you can see that lines up, right, with my ribbon that's on my Mass Effect moving average. That is the end of the trend. You would have gotten out at the peak. So you would actually catch the whole move. Then here, the least squares moving average closes below the RSI, and it's telling you, hey, get into the trend. And you can see again that the ribbon is just about to turn green, and here the stochastic probably has a little bit of green showing on it. Let's see. Nope, not yet. So that tells me I would not get into this trade. Do not enter this trade, period. Don't do it. Don't do it. No, don't do it. I understand what you're seeing. I see the RSI is moving up. I see you got a green Heiken Ashi candle. Do not do it. This indicator, along with this indicator, pair together wonderfully. This is going to be a very short trade. You could probably do it on the 5-minute and catch a little something, but on the 1 hour, I wouldn't do it because you're not really going to go too far. So that is the moving averages that are tied to the RSI. Now, a note from me from Coffee Shop Crypto: watching price action is one thing, and you can be great at it, but it's easy to get caught in a liquidity trap, like this one right here, or potential stop hunts. Obviously, you won't enter a trade unless there's enough volume behind that candle to show that there's actually true momentum in the market, right? So setting your RSI moving average to VWAP means you can see when a candle closes above going bullish or below going bearish. If you see price action going bullish on your chart and the RSI has a good move, you need to make sure that your Heiken Ashi candle opens below the VWAP and closes above the VWAP. This means there is true volume in this trade. No more getting caught in traps or liquidity traps or stop hunts. In a later update, I'll be setting buy and sell alerts to help you enter and exit trades. Again, these two moving averages are great for both getting into trades and faster for getting out of trades. The hidden lines of support and resistance are the upper midband and the lower midband. I've noticed that at each 10 level, the RSI scale, both RSI and Heiken Ashi candles react to hidden areas. These areas present mainly at the 40, 50, and 60 level. I decided to plot these lines at the 40 and the 60 and color code them as needed. You can change the colors if you want. You can set them to just some gray areas just so you have a little warning saying, hey, something's going to happen here. This doesn't necessarily mean sell, and this doesn't necessarily mean buy. In another video, I'll present to you how I do entries and exits using this indicator, but today's video is strictly, or I'm sorry, I got off topic a little bit, but it's supposed to be strictly about the indicator itself. So again, big shout out to Jay Rogers for coming up with the original of this HArsEi, which I now call the Coffee Shop Crypto HArsEi. And as of this moment, you should be able to find it on Tradingview. Follow my links below and follow my profile to get more updates, and I'll be more than happy to answer questions in the comment section below. Thanks, everyone.